Travis Ricciardo, we've got a bit of a different episode today, don't we?
It is a bit different. We've coaxed our good friend Anthony Kavangh, Cav, as we call him, of Chester. I think he runs the Chester Opportunities Fund. One of Cav's, things he's been talking about a fair bit. In fact, he alluded to this stock and this company, this opportunity, when we spoke to him a year ago, when we did our fundy predictions. This is a copper junior that Cav he's had a long history with. We're going to peel that out, why it's interesting to him, why he why he thinks there's a special situation on hand right now, and we've probably just got to get out of the way. Disclaimers up front, mate. We own stock in this company, which is Havilah Resources. Ding, ding, ding.
Horribly conflicted.
We're conflicted. Ignore any of our perspectives from that angle, or just take it with that grain of salt.
But I think it's super entertaining for a number of reasons. Cav has wanted to do this episode for a long time. It's a fascinating company. As he explains in the whole story, he got involved quite some time ago, but he's just such an interesting thinker to understand and hear from him how he tried to sort of create value here. Is both entertaining and insightful. And for that reason, I'm pretty keen to share this story on the back of obviously the deal with Sandfire that's come out.
Yeah, mate. I totally agree. Hopefully, money miners, you get some value. We invite a bit of feedback on this one. If you've got a contrary perspective to us and Cav, drop a comment. Let us know why our view might be the wrong view.
I'm sure it'll come back one way or another.
Yeah.
Mate, we've got a new partner as well, Switch Technologies. I'm very excited to share this. Yeah.
Tell me about Switch, mate.
Mate, Switch are an engineering company based right in the heart of Perth. They've got 5,000 square metres in the middle of Northbridge. There's an old Toyota facility there. And what they do is really cool. 25 engineers working in the company, and they are a bunch of problem solvers, mate. So if you are running a process plant, you're at a mining company in one form or another, and you've got problems you want solved, Switch is the team you need to get in touch with.
So they turn ideas into solutions.
That's it. They execute the ideas. And I'm sure there's people at mining sites right now that have a bunch of ideas and they just don't have the bandwidth to execute on them. So Switch are the team you need to get in touch with. We've got Mike's details in the show notes, which you can check out. But they've also got a bunch of solutions that they've put into the market out there right now. So they had this wicked project with Pilbara Minerals. They retrofit a Cat 785 150-ton dump truck, put this wicked hybrid system in there. So a bunch of really cool things
existing mechanical truck with a hybrid retrofit. It's really
all happening here in Perth, mate.
Cost savings off the back of it, and that is a big part of the message here, mate. These are cutting edge kind of tech where there's a commercial business case and it saves dollar per ton. Because this is their expertise, their capability, JD, I thought, here's my pitch to Switch. This is to you, Mike. I've got some ideas myself on how you might be able to save some dollars per ton in your processing facilities. First one,
let's hear them, mate.
I call this one the stop running it till it explodes alert system. So you have a little sensor box and it warns you when a pump or a gearbox it's about to become a crime scene instead of being run proudly into the ground because it survived the last shift.
That sounds like a problem Switch could help you with.
Second one, I don't know if this one's better. I call it the stop overgrinding everything mill whisperer. So it's just a control overlay system that stops the mill from turning decent 200 micron feed into baby powder.
Not bad, not bad. I'm sure the folks out there at the mine sites have hundreds of these problems.
They're probably better problems than I've come up with.
They're probably very real world problems, mate. And it's a good thing we've got people like Switch solving these problems for us.
If you've got an idea, just email mike@switchtechnologies.com. He will come up with, they will come up with the solution for your problems that save you money.
Go Switch.
Go Switch.
All right, let's rip in. We've got a hell of a story to tell.
I don't even know how to intro this story other than to say, Cav, through knowing you, you've lured us into the appeal of a very intriguing South Australian undeveloped copper stock called Havilah, HAV. We own stock in this. We are conflicted. Anything that comes out of here, just assume that we have every incentive for an outcome higher than where the share price is today. So discount everything we're going to say from that perspective. But we bought shares on market with our own money, so hopefully there's some alignment on that front. I don't even know where to begin here, mate, because
I actually did check my notes and I'm like, where did it begin for me? It was kind of one of those stories as a South Australian and someone who's caught up in the mania of copper and everyone trying to find a copper asset to develop. You kind of look at everything that's available, right? And it turns out the first, instance that I had with the company was actually April 2022. And it was in kind of the madness of it was one of the lockdowns in Melbourne where a lot of people couldn't actually get out of the state. And I was in Adelaide at the time with my family. And UBS had organised a visit to some Adelaide companies. And a lot of them were, at the time, you'd say subscale and semi-economic. But amongst it, we went and saw Oz Minerals and we saw Anaska and a few of the other larger plays. But in the mix was Havilah. And so at the time, it was like a $60 million company. And I remember going out there and seeing all the optionality of the assets and just turning to a few of the guys going, that was really interesting, but like it's a $60 million company. Like, what the hell was going on here? And there's a family member of mine who'd previously mentioned it to me, and I called them up and I'm like, what were you telling me about? Haven't they? Like, oh, yeah, it's my only PA position. And I think you should really take a look at it. I'm like, oh, look, it's probably too small for us, really subscale. And on that same day, we saw Oz Minerals later in the Arvo, and Oz Minerals was talking about how they'd done these deep dives and all the copper assets literally globally, not just in Australia. And I couldn't help but think to myself, maybe there's something in it. Like the conversation we'd had from Havilah needing a big capital partner to help develop that asset to Oz Minerals needing a ready to develop copper asset that literally had done all the exploration work. They just needed to get into production. I was kind of like, at the time, it was one of those thoughts you never really do anything about. It's just like, geez, there's something probably there, but nothing's going to happen. And then I can't remember when exactly the deal got consummated, but it would have been, I'd say, 6 months later down the track that Oz Minerals ended up kind of putting an offer on to that asset in Kalkaroo.
Yeah, there was an option agreement that they entered there from memory.
Yeah, 100%. And at the time, I was just like, wow, like one of those instances where just fortuitously you saw the two companies in the same day, both South Australian companies. You thought maybe it'd be great synergies to see those two together, one needing capital, one with capital, one wanting a growth project, one needing desperately a growth partner. And then they come together and you're like, oh, wow, we were there. And I send a message to some of the guys that were on the same site visit going, isn't that neat that that kind of happened together? And kind of nothing came of it at the time. And just like, yeah. And I mean, I think at the time it was probably around a $400 million deal. I know there was different structures to what the recent Sandfire deal has been announced, but lo and behold, obviously the BHP Oz Minerals takeover occurred, and in the mix was kind of like this small asset that probably didn't really fit within the BHP portfolio. Obviously didn't, the way it kind of transpired. But at the time you're like, what's going to happen with that asset? And I started getting interested probably as the potential investment thesis when I got a feeling that Havilah had gotten to 27 cents at the time, which would have been, I'm going to say, about 100 million market cap, maybe, no, probably even less, when it was kind of almost, it felt to me 50-50 almost, whether BHP was going to kind of progress with that option that Oz Minerals had originally entered into once they'd taken over Oz Minerals. But yeah, and then BHP kind of reneged from that option, and it kind of, I think, I should pull up my charts, but from memory, Havilah went down to like, I think 15 or 16 cents, and everyone just thought there's nothing here. But all the information that I was hearing from everyone involved was that Havilah was going to be, well, technically it stood up. It's just that it was too small for BHP. It had no technical flaws. There was a lot of interest in the asset because of the grades, because of the oxide layer that sat on the top, because of the location, and because of some of the exploration hits nearby. It almost, became a province play in Havilah. But it kind of, nothing really was ever going to happen at that stage, because it just became one of those small cap companies that just didn't have the capital and didn't have the eyeballs. And no offense to the management team, but I don't think it was marketed appropriately. I'm happy to go whatever direction you want to take those kind of comments. But
I remember you first mentioning it to us. Must have been subsequent to that option lapsing that BHP let lapse. And I remember you saying I still think it was a good trade because what was the probability that BHP exercised that option or not, yada yada. And even though the stock fell, I remember you articulating to us that you still thought that was a good bet to have made. Then another bit of context on this, I'd heard from someone that the BHP deal with Oz Minerals is part of the rationale why Oz Minerals signed the option agreement in the first place with Havilah. Maybe that option agreement was actually part of the defence, value negotiation stance from Oz Minerals in the first place. Maybe they didn't actually necessarily have the view to exercise that option, but at least having that on the table gave them some legs to negotiate an uplift in price from BHP, which ultimately did come to fruition. But you still zoom out and you think there were two copper projects in Oz Minerals' backyard that they could have chosen from, and the knock on both of them for the longest period of time is that they haven't come knocking on either of them, and that was Rex Minerals Hillside, and that was Havilah's Kalkaroo, and the one that they did at least a paper deal on was Havilah's Kalkaroo.
Yeah, I definitely heard something similar. So in amongst my interest in this company, I've spoken to most of the key players I think that have been involved with it. Exxon Mineral staff members, other people associated with the deal, geologists who've looked at the data, people within the South Australian government, all types of different parties, just to understand why this asset still sat there as like this undeveloped asset that has approximately 0.9% copper equivalent grade for an open pit. It almost became a semi-obsession of mine to understand why this asset was still left undeveloped. I think those conversations might have progressed one night over dinner when there was another Money and Mine guest that kind of had been on your show, and I was discussing with him what his thoughts were and potentially trying to progress a deal with them. And I could take you through a story, but I don't necessarily want to reveal who that was in case they don't necessarily want their name to be associated with it. But certainly worked our own angle to try and help the management team, I guess, liberate value from this asset. And there was probably, I would say, at least 3 different approaches to that, to the management team of this company between, let's say 2020, late 2023 and probably early to mid 2025, in different forms.
And that's three from you and your group, Cav, not to mention the others that we...
Correct.
That have sort of, we've inferred that have approached the company with alternate proposals.
Yeah, correct. So I would say that I kind of almost had a investment consortium, and I was inspired by someone I'd seen had put together a few deals of a similar type of, I guess, methodology to what I was thinking, and that like if we could help them, I guess, build out their management team a little and also kind of help capitalize the balance sheet, it might give them a bit of a stronger footing to go approach the investment community with a more institutional type of company than what they have. I mean, they've operated at a pretty shoestring budget as long as I've known them, and gotten by piecemeal with their own drill rig. And I kind of thought to myself, well, if you can actually have the money behind this company and actually be well capitalized with a pathway to getting a feed completed with your own capital, and you actually bulk out the management team. There was a few guys at Oz Minerals I would have loved to say that we were able to get Andrew Cole and convince him to come join the board or the management team of Havilah, which was my original thought. It wasn't to be, but there was a few guys in the mix, and I don't want to say who they were in case they didn't want to be named either, but we'd spoken to a few guys that we thought might have been appropriate to help with the management team there, and thought what we had was a good proposal, including maybe a corporate that might have given some added credibility to the project and to the asset. And so, yeah, the most recent approach, and I might have alluded to it in your Christmas crackers special. Like I did mention the fact that I was pretty interested in a couple of copper plays, and one of them was this potential deal that we were thinking about at the time. But obviously that deal didn't eventuate, and at the time I was kind of a bit confused as to why management would rebuff such an approach. I mean, us potentially helping them fund their balance sheet and take that project to a PFS level, and also do some further exploration drilling, which is kind of what the Sandfire deal has looked like. So maybe they did learn something from our approaches, is kind of what the Sandfire deal has kind of come out with. But we were going to help them to basically develop it to a PFS stage themselves, or to a pre-FID stage themselves. So there's a lot to it, but what I think has transpired ultimately is that there's been a lot of people that have looked at the asset, and most of the feedback I've had is that there's been no technical flaws with the asset, which is the same feedback that we've had from our independent technical experts that have looked at it.
They've had an open data room for a very long time here, right?
Yeah, correct.
Yeah.
They have had an open data room, and there's been quite a number of parties, I believe, that have gone through that data room. Our fund had personally been approached by 2 or 3 of those parties. asking for opinions, advice, asking for someone that might actually be able to push management in a certain direction. So I was certainly around Diggers expecting that maybe something might occur of this type of standing. That's not to say we're 100% happy with the price or the way the share price has reacted since, but there's certainly been a number of parties that have expressed interest and done the detail, as far as I'm aware, on the asset. And I mean, my business colleague and I, Rob, we were in Perth 12 months ago, I'd say now. And I remember having the meetings with most of the companies in Perth, your standard companies and, your South 32s, your Sandfires, even some of the gold names. And the consistent feedback we kept getting was that everyone would have loved a developable copper asset in Australia, right? And it just was consistent over and over again. Oh, we just love a 50,000 tonne per annum asset in Australia for copper. And obviously, Mac was there, but that was already developed, and you had to pay a pretty full price tag, is what we've seen Harmony to acquire that asset. But everyone just consistently said we'd love a developable copper asset in Australia. And I just kept thinking to myself, well, has anyone actually looked at this asset? I mean, I know that there's been some assets up in Queensland that have transacted, and obviously the Rex Minerals deal, but my understanding of Rex is it's probably more pristine pastoral land than what they have in Broken Hill. The grade's probably a little bit lower, and it's probably a bit more complexity in the build at Rex's project than there is at Kalkaroo. So
it was that Rex deal that got JD and I very interested in Havilah, because the moment you saw this, $400 million deal for Rex, it was like, well, if Oz thought that Havilah was the better asset, then and this company's got a market cap, I think at the time it was like 65 million bucks or something like that.
We touched on the Winu one as well, which has an asterisk to it. But
you stole my Winu thunder, right? I think after the Winu deal got announced, I think I sent you a message similar to the line of, if Winu is worth XXX, then Kalkaroo is worth ... And I think you used that and put out a tweet at the time. But at the time, you were trying to kind of, I guess, keep discreet the fact that like Havilah and Kalkaroo were the companies and the copper name that I was talking about in my Christmas crackers. But anyway,
yes.
What'll be will be. But as we sit here today, I mean, we could delve into the deal, because I'm still sitting here going.
Before the deal, let's talk about the share registry of Havilah. Like, why has there been an impediment to I don't know, do a deal? Like, what's the shareholder dynamic and the influence on the company? And it's not necessarily like a bad one. There's just a holdout on value. No. Yeah.
Someone actually asked me about this today. They're like, "Oh, what can you tell me about the Havilah share registry?" And I'm like, well, I think it's pretty devoid of institutions. I think there might be one or two. Some of them aren't necessarily institutions in your black and white scheme of institutions. There's an interesting character called Bob Johnson, and I don't think we've got enough time to go through the whole history of Bob, but Bob was the founder of Havilah.
Yep.
Also the founder of a company called MapTech.
Big company.
Big company, yeah. And Bob has a lot of influence within the company, to the point where I had presented to the board previously some of my thoughts on Havilah, and Bob was in the room at the time, which I thought was interesting, because I think he's basically, as a material shareholder and an ex-founder of the company, he still has a fair bit of sway with the current board and the management team. So sometimes to the point where it's extremely influential. So and his position on the share register has been questioned at times in terms of how much stock he actually controls. So I think that's an interesting aspect to the whole register. And I think sometimes the company has ended up doing some things that aren't necessarily in the interest of all shareholders. Might be in the best interest of Bob, but when you're a founder of a business, sometimes that's what happens. We've seen plenty of examples of founder-led businesses doing some things this year in particular that might not necessarily be for all shareholders. But I think he's got a really interesting past, Bob, and I believe when I presented to him and the board that we shared some similar philosophies into what Havilah and Kalkaroo could be for particularly South Australia and the industry at large. I generally see kind of Kalkaroo and the province that they're in as kind of almost been a foundational asset for copper in South Australia. Beyond, obviously, there's Olympic Dam, Prominent Hill, and Carrapateena, but I think South Australia could be a lot more than that. And this province, the Carrapateena province, the Coonamarra province that they've got, has the potential for a couple of Kalkaroo lookalikes. I mean, we've seen some really interesting hits that have been there that just haven't been followed up because they haven't had the capital to drill. And I'm really excited as to what could actually transpire from some of the drill holes that might be drilled with the exploration money that Sandfire is throwing at the province. So yeah, like, I mean, there's so much to it, but I think that Bob Johnson is very super interesting.
To the credit of management, it's not like they were like spending a crazy amounts of money and diluting existing shareholders a massive amount along that way. There's been a holdout for a deal that has been somewhat comparable to the one that was tabled by Oz
100%.
Minerals, and now, as of a couple of weeks ago, we've finally gotten a deal that is comparable to the one that was tabled by Oz Minerals in 2022. Which, do you want to run us through what that deal was, Cav, with Sandfire?
Yeah, well, I think as to your point, some of the challenges have been that, like, that deal being a couple of years old now, it was at a copper price. I'm guessing now about $3.50 a pound, and obviously we're about $5 today. And I'd say gold prices are probably $1,500 US, and we're at, around 4,000 today. So you've had a pretty strong commodity price environment since that Oz Minerals deal, when the deal implied was $400 million. So I can understand management's, I guess, anchoring to thinking that maybe they should be holding out for a $600 million type of price tag. But this probably comes to your original point, Trav, when you mentioned that some people had suggested that Havilah was almost used as a bargaining chip to BHP, where some people might have suspected that maybe the price tag at which Oz Minerals has struck that deal might have been probably $100 or $200 million higher than what might have otherwise been the case if BHP wasn't lurking there as a takeover bidder that they were trying to, I guess, push in one direction. So that probably created some issues for management and the expectations from, I guess, shareholders and even themselves, going, well, geez, $400 million price tag with copper price and gold price now higher. How can we transact on anything in, and some of the price tags that I suspect have been floating around have been $200-300 million, right? And so this deal that they've now got with Sandfire, $105 million up front, scrip and cash. So that 105 does swing around a bit with the Sandfire share price. That literally gets them an option to potentially acquire another or 80% of the asset for another $105 million. So that in itself is, I think, extremely interesting for Havilah shareholders. I think the price tag itself, even though the headline looks like it's $210 million for 80%, you got to remember they're also funding a PFS, which could be anywhere $50 million. I think could be a little bit higher than that even. They're putting $30 million into exploration, into ground that otherwise wouldn't have seen that type of capital spent. And then at the end of all of that, people have said to me that the biggest risk is that Sandfire might do all that work and then walk away. I mean, if they did spend that money, let's call it $185 million, including the PFS costs and the exploration costs, and then walked away. I mean, is that a risk to Havilah? Because then they end up with 100% of this asset, right, that has had a fair bit of interest beyond just Sandfire and Oz Minerals.
That upfront is non-refundable. They get to keep that.
Well, 100% is binding,
and
it's non-refundable as long as at the EGM the shareholders vote for it to occur, right? So that in itself is extremely interesting. If then Sandfire wants to progress with the 80%, they then need to spend another $105 million in cash and scrip, which is in itself extremely interesting. So that then sets the price tag 85 plus 105 equals what's that? 200, let's call it $300 million for round numbers. And that's for 80% of the asset, right? So then Havilah are then free carried on the remaining 20%, almost like the Onslow situation for the joint venture partners to MinRes. Now, you'll need to pay back the capital. So let's say that this is a, $1.2 billion project. 20% of that, you're then going to be talking $250 million that needs to be repaid from the cash flow of the asset. Might take 2 years to repay it if I'm being optimistic and generous. But
importantly, Havilah don't have to fund that. They don't have to.
Havilah don't have to fund, right? Yeah. So you're talking about a company that's, literally gotten by on a shoestring. And you rightly pointed out that I think management have done a really good job in controlling costs. Like, people can call this a lifestyle company, but it's not a lifestyle company that's been going out there and spending a lot of money. I think Chris has done really well for the budget that they've had. I just think maybe at times they could have been a bit more market facing and kind of driven a lower cost of capital for themselves and had the ability with more capital. But what will be that's in the past. But they've done really well with the budgets they've got. They're now in a position where they're going to be fully funded for that asset, don't have to put any dollars in themselves, gets to a point where they're going to have 20% of it that's free carry, don't have to put in any capital, and you're getting a 20% stake in what is originally going to be probably a 40 to 50,000 tonne per annum project. Maybe it could get upscaled to an 80,000 tonne per annum project with a 20 million tonne per annum mill. I don't know, but at the same time, in a small cap copper space, you know as well as I do, there aren't a huge amount of ways to play it. Like we're playing develop because we love everything that Bill's doing. Maybe not so much the Woodlawn ramp up to date, but I think it's going to come good. But there's not many ways to play copper, right? And this is kind of almost a look through at a Sandfire type of asset, non-operated position in an asset that's operated by Sandfire in Australia. So, yeah, I still think at these prices, if the look through before you even think about the 20% is $300 million for that 80% stake, and then that 20% stake you'd assume would get transacted close to NPV. If you've got Japanese or Korean money looking to buy into that project when it gets to an FID decision, I'd assume it'd transact at close to NPV. Now, our NPV of the project using gold prices close to where they are now and long-term commodity prices in line with consensus, like a copper price of 450 to 5, we get $1.5 billion Australian at a 10% whack. So that 20%, could be worth as much as $300 million in its own right, which gets you to about a $600 million type of valuation. Now, this is a small cap company that has always struggled for capital and, has got an interesting register, as you said, and a management team that I guess a lot of people in the market don't necessarily back. So you've got to trade at a discount to that $600 million. But I was still sit here today, and I think I said it to you guys the day of the deal. I thought the day after the day the deal had been announced, particularly when it opened up at, I think, 33, 34 cents, was cheaper than it was the day before, even though it was up 30%. I think it's a funny thing to say, but on a risk-reward basis, when the asset is potentially now going to be operated by Sandfire with the clout that they have and their ability to develop projects as we've seen with Matteo, I just think it's a completely different company to what it was before.
So, Cav, with all the work you did over the years looking at it, the proposals you put together, what did you actually think of the deal that Sandfire and the company agreed to?
I've had a couple of people ask me this, and I don't want to go too detailed as to why I got asked this by someone in particular, but I actually said to this person, I thought it was a really good deal. I thought it was a really good deal in the fact that Sandfire have entered into a binding situation, whereas the Oz Minerals deal, there was an option over the asset for 1 or 2 years, so you kind of were sitting half pregnant. Whereas this, once the EGM gets voted on, assuming there hasn't been an interloper, then it's binding, right? So Sandfire are obligated to give Havilah that capital up front. You could still say there's a question mark whether they're going to take the other 80%, but that puts Havilah in a very strong position at that point. I would say that the fact that they've still been able to retain some of the southern tenements 100% owned, like that was one of the sticking points with anyone trying to approach the company for a full company takeover, is that the management team and Bob genuinely believe in the southern tenements there is going to be a Kalkaroo lookalike. Now, I haven't seen all the data. I can't confirm or deny whether that's going to be the case, but like Bergskate for them stands as a really interesting prospect, and they almost have dreams that it could be bigger than Kalkaroo. I think the fact that they're still able to retain a stake in Mutooroo, which I haven't even mentioned when I was talking about the $600 million in value that they've potentially got at Kalkaroo. Mutooroo, for me, 20 million tonnes plus at 1+% copper or some cobalt and a little bit of gold, I think stands as a really interesting asset as well. And JX Advanced Metals from Japan have been negotiating with them on that asset. I think the exclusivity period has expired on that, but I still think there's optionality for a deal to occur there. And maybe that could be $100 million of value in its own right. We certainly see value 100 plus, particularly if they can come up with an infrastructure solution. So I actually think the deal ticks a lot of boxes in my mind. I would have loved to see a higher price, but at the same time, compared to the Oz Minerals deal, we can argue how I've just cut it, that maybe there is $600 million worth of value here, which, means that Bob and Chris did the right thing in not kind of selling out the company for a cheaper price or selling the asset at a cheaper price than what they have. Because, if Sandfire can get this project to an FID decision, and then if they did want to sell that 20% stake, which is free carried, and maybe you can get 200 million plus for it, then maybe we can see $500-600 million worth of value, which with where the share price is trading, like I get it's a small cap. I get that there's been a discount for this team and everything associated with it. But I don't know what the appropriate discount is. I just think it's way too much at the moment, right? Like,
Yeah.
I mean,
Well, think of the
you're
day
trading
the deal was
it.
announced. It was 34 cents, and the upfront consideration alone was 30 cents per share. It's just it's a table banger, and now it's like trading like 40-ish, 43, 44 cents per share, and the see through even after tax you can be constructive on. And
so you're $150 million, right? So you're literally paying for the upfront capital and maybe Moodaroo.
Yep.
Not even, like, you're paying for the upfront capital, you're paying for the expiration that they're going to spend, and you're paying some of the PFS costs. So, like, you've literally got a free option at their 20% free carried holding. You got a free option that Sandfire comes on, gives them another $105 million, which what's that? It's 22 cents, I think. So I still see kind of $1 as being a reasonable line in the sand, right? And that's $350 million at this stage of where they're at. But maybe the market's waiting for the EGM vote to go through, because if you look back at the history of this company, there has been some funny situations with assets in the past where deals have been voted back. But I mean, it's extremely interesting where it's sitting today.
There's an EGM vote end of Jan, and if there were any other like interest in the asset, you've effectively got to move before that EGM.
Yeah, 100%. So, like when I said I like the deal, I think another aspect that I like about the deal is there's been question marks whether the process that they've run has been as thorough as it could be, and whether it's created enough competitive tension. I don't know the ins and outs of that whole process, because it's subject to confidentiality agreements. But now we've got a very live auction, right? So if you are really interested in this asset and you want to acquire it, you've got until the end of January, and what will be, right? As a shareholder, like, if no one else bids for the asset and it comes the end of January, I'll say then Sandfire won the auction, and fair play to them. It's still a really good price, and the share price certainly doesn't reflect what that price is. But if someone else is interested, then we're going to find that out hopefully before the end of January, and we'll see what will be.
One of the other interesting details here is that the stock just doesn't trade that much. The liquidity is pretty low, and obviously you got the massive shareholders and a few others speaking for a good few percent here and there, which all culminates in a good few. But as always is the case, on the day of the deal, you see heightened volume. But even on that day, it wasn't massive. It's a few percent of the company, and that's completely died down. So to that end, if somebody were to come in and try and buy a stake there, they're not going to have an awful lot of luck without pushing the share price up, in my mind at least. Do you see that the same way?
Yeah, I think that's right. And I think, what can I say? I would suspect that maybe parties might have tried to consider acquiring the whole company, and maybe that might have been a bit too hard. Hence, they've had to negotiate in this type of fashion. Like, if I was Sandfire, like, I would have thought it'd just be easier to try and acquire the whole business, right? And I don't know if they approached him with that proposal. I know other parties in the past have done so, and it's been harder because of, like, some of the desires of Bob and Chris, and they pretty much don't want to see this asset go at almost any price, but eventually they've got to realise the limits of their capital and other shareholders' desires. So, I think that if the right approach was made, I think they'd have to entertain the consideration of the whole company being acquired. But I mean, if we can see $600 million worth of value in that deal, like, you're going to have to see a price a fair bit higher than where it is today to at least entertain an offer.
Can we talk about knocks to the thesis, Cav?
Sure.
One that comes up a bit is Met. What do you say to that critique?
Well, I'm just going to say I'm not technical. I'm not a geo. I'm not an engineer or any stretch of the imagination. That the people that I have spoken to and I have kind of, I wouldn't say what's the correct word. I've certainly asked a lot of people who've looked at this in detail, their opinions, and people that I trust, family members that have the expertise and the technical know-how. And I'd say that a lot of the commentary that I receive back is that a lot of the mistakes that get made is that people just think you can just blend the oxides and the sulfides at the same time, the carbonates and the sulfides, and that's probably where you're going to get tripped up. Like, you probably need two separate processing circuits for the oxides and for the sulfides. And if you are to process them separately, is my understanding, and all the work that has been done on recoveries, and even probably the work that BHP did that supports, some reasonable recoveries. You're not talking high 90s, but you're talking 90% types of recoveries, comes from processing those in separate kind of circuits. But yeah, I mean, a number of people have mentioned it, but it's not like the reason why the asset is where it is. It's not as simple as it could be. If it was an amazing piece of geology and it was an A-grade asset, it would have already been like bought by someone. I would say that we've heard plenty of other, I guess, assets that, during certain markets that most people question them, right? Like, I think we've thrown out different examples where people questioned Dalgaranga, people questioned, Capricorn's Karlawinda asset, right? Like, it's low grade, it's, tough ore body, whatever. But like in the right environment and the right operators, you find solutions to these types of things, right? There's plenty of examples where, in the right priced environment, that these assets work. At gold prices of $1,000 an ounce and copper price of $3.50 today, maybe Kakaroo would be a bit more of a challenging asset. But like with that oxide layer that they've got on top, there's 500,000 ounces there that's in the pre-strip. But if you can get the right processing circuit, that can create a pretty attractive income stream to help you do the pre-strip, that can help you get into the sulfides, that, then hopefully you can process it at the right economics.
Do you get any comfort out of the fact that Sandfire under Brendan Harris has obviously been looking at a bunch of different growth options? This is the first deal that they've publicly come out with since Brendan's been MD there. You wouldn't think they pay themselves upfront non-refundable component of 105 without having some degree of comfort on the met themselves, even if they're proven to be wrong over time. Like, they themselves must have a view that they're constructive on the met to pay a non-refundable 105, right?
Yeah, I mean, I get that everyone wants to have an opinion, but sometimes I'm almost surprised that, like, guys on X who will come out and knock the project fail to recognise the fact that Oz Minerals, BHP, Sandfire, and probably at least 3 or 4 other parties that maybe can't name at the moment have gone and done the met work and said, given it the thumbs up. And yet, they've looked at old feasibility studies and some of the data that they've seen and, from old announcements and going, oh, the met doesn't work. And it's like, well, to your point, yeah, Sandfire have entered into a non-binding agreement, right? And people will say, oh, yeah, but it's $105 million. It's an option. And I go, yeah, but this is what they're putting their name to, as you said. Like, they've looked at, I don't know how many projects they've looked at, but quite a number of projects. And Oz Minerals, I sat down with them, and they literally looked at every single copper asset that was available, and whether or not it was just a bargaining chip for BHP, you're not going to enter that type of agreement if you didn't believe in it and you hadn't done the work. So, yeah, I agree. Like, there's enough credibility and behind the names that have put their name to it to go, well, there's enough detail to show that it does work.
So you've made the opportunity pretty clear to us. We've spoken about it a bunch, Cav. It's super kind of interesting. I'm really curious to hear about how you think about sizing, positioning in the name right now, because we've spoken about it for so long, but the story has really changed the past couple of weeks, and you've always been very disciplined about how you think about sizing and the like. But obviously we touched on the fact that we personally bought more after the deal came out. How do you think about that?
Yeah, I mean, like, we kind of think 2s, 4s, 6s in our fund, and this sits within our smaller opportunities fund rather than a big fund. At times when we were talking about potentially helping them with a capital solution, we were entertaining the idea of maybe entering into our larger fund. But within our smaller opportunities funds, it was originally a kind of a 3% position. Like, when we got comfort that maybe they were going to come along and potentially accept our proposal to kind of fund the company, then with a capital raise, then we're thinking of potentially taking it higher, because I could see the potential. On the day of the announcement, even though it was only a 3% position, we just thought it was just too attractive an opportunity, with the risk reward having improved from the deal, and potentially like at least $1 worth of value sitting there at 33 cents, that we just had to upsize it. Now, whether it stays in that upsized state, so it's gone above a 4% position now, which is one of the larger positions in that opportunities fund. But yeah, it's not we haven't bet the absolute farm on it. We're not taking a 10 to 20% position because that's just not how we position size at Chester. But it is one of the larger positions just because we see the risk reward is extremely attractive. Yeah.
I like it, Cav. Is there anything in the narrative, in the story, or in the thesis that we kind of haven't touched upon?
I'd love for you guys to do a deep dive on Bob Johnson and some of the interesting kind of history that he's had with MapTech, because it is a pretty interesting story. I think the whole MapTech story, and then I think there was some interesting kind of court cases that might have revolved around Bob. And I'm not quite sure where they all got to, but there was certainly some late night reading that I did that was pretty interesting on the matter. I'm not sure how much that has impacted Havilah's decision making, positively or negatively, but there's certainly some interesting features around him. And what else around the story? I mean, I just think that maybe we might see some other interlopers. Maybe, I mean, that data room has been open a long time, and we were personally approached by a few parties that were interested in that asset, and the conversations we'd had with other parties in Perth suggest that maybe there are others that are extremely interested. And I don't know how these things work. When one person's interested, all of a sudden you've got other people interested. Like I remember when I was a single guy, as soon as you had one girl that was interested in you, all of a sudden you get a few more other offers. So maybe there's going to be a couple of parties that come out. But I mean, we've got 2 months, and it'll be interesting over Christmas to see what unfolds. If nothing else unfolds, then I'm pretty happy with the way that the Sandfire deal looks on paper, right? And hopefully we'd see that de-risk over time as people see them kind of, I guess, enter into that binding, and you hopefully get a Sandfire share distributed to you as a Havilah shareholder or whatever it is, and see how things play out from there.
Yeah, absolutely. How the company goes about allocating the funds is the kind of next step to think through if no interloper emerges. Cav, it's always awesome to have you on the show to chat through your ideas and your thinking. So appreciate you coming on again, mate.
I do like to say that I don't usually like to peg myself to one stock, but I mean, I did promise you guys during the Christmas Cracker special that, like, whenever something transpired with this company, because I was a bit mysterious about it, I don't like being too mysterious. I'm usually pretty transparent with everything that I do, but I did say that when something happened with this company that I'd come on. So this was as I promised. I didn't expect to honestly take November till it occurred. I honestly thought it was going to be a couple of months away at the time when we filmed it. But as you know, with all these things, sometimes everything takes a little bit longer than you hope. But let's see what happens. I seriously think there might be another chapter to this story. Well, there certainly will be, but it's just whether or not there's another chapter in between kind of the end of January in terms of another bid. So fingers crossed, and let's see how we go.
Fingers crossed, mate. Let's see if the next Christmas prediction is as good as this one.
Fingers crossed for a special gift from Santa this Christmas, mate. I don't even mind if it comes in January.
Well, yeah, I don't know. I mean, maybe getting an M&A specialist on to figure out what's the best kind of time to lob a bid. But I know some people that have tried over Christmas when it's
hard work.
It's pretty inconvenient for some people, but it certainly puts pressure on other parties during that time. So we'll see what happens.
Yeah, it absolutely does put pressure on. No, appreciate it. What's the next Havilah, Cav? Got anything else in the works? Anything for us to study up?
Oh, I can recycle some of the old names that we've got. I mean, like, we still think there's a deal to be done on Comet Ridge. And I get what you're saying about the Taroom Trough, but I seriously think there's still a deal to be done there. I think 400 BCF worth of gas that is still unencumbered, apart from one small contract on it. I'm also really interested in this Equus gas that's coming onto the market in December. I think that looks really interesting. It's almost 2 TCF worth of gas with 40 million barrels of condensate that's coming on with an EV of maybe $20-25 million, which I think might be a bit mispriced. I think there's complexity with that asset as well, but I think the price tag that's coming on it is pretty attractive. I still think there's a lot to come from Develop and Bill, or just was without at Woodlawn. I guess I did kind of make a joke about his ramp up, but I think that's back on track now. I think the ramp up's looking pretty good, and I'm looking forward to the next couple of quarters that they produce there. What else? There's quite a few. I mean, Antipa, we're still waiting on some resolution there, maybe. So there's a few.
There is indeed, mate.
Well, I need to read up on there.
Appreciate you. Being willing to bang the table on this one.
Oh, mate. There's one thing I'll never stop doing. That's banging the table on the stocks. I know I should have done the big ding ding ding, but obviously you can tell I'm a shareholder. So
Ding, ding, ding all round, if that is not completely obvious.
just put the dinging going through the whole episode. All right, just make
Yeah.
sure that people realise that this is a completely biased opinion.
Yeah.
But like,
Brought to you by
yeah,
biased people.
yeah, like I'd love to hear some retort. Like, because when you see it on paper and you see it's binding and you see like the deal that's been struck, I mean, obviously there are retorters because people are selling the stock at 42, 43 cents, but I just kind of think the risk reward here is pretty attractive.
I think putting your views out there is the best way to get the feedback, mate. So keen to hear what comes back our way after this.
I'm sure I'll get some stuff.
One way or another.
See how we go.
Ding, 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 if it wasn't loud and clear.
There we go, mate. Fantastic to have Cav back on the show. It's been far too long. Always love chatting with our good man, and all made possible thanks to our fantastic partners. Switch Technology, new one at the beginning of the show there, as well as the classics Sandvik Ground Support, Focus, the platform by MarketTech, and Intralinks.
Hoodaroo, money minus.
Hoodaroo!
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a